Well, 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 look who decided to wake up today. After weeks of pain, liquidations, and enough fear to power an entire horror movie, the crypto market just punched back. Bitcoin just ripped back above $73,000, its strongest move in weeks. Ethereum is charging back over $2,100, and crypto stocks like Coinbase and Strategy are suddenly acting like they drank 3 cups of espresso. Now, the big question today isn't just why the market rallied, it's whether this is the start of a real trend reversal or just a classic relief bounce after February's capitulation. Because while crypto is pumping, the world outside crypto is still dealing with war headlines, oil volatility, and geopolitical chaos. But here's what's fascinating. Despite all of that, Bitcoin is holding up. And some analysts are starting to ask a question we've been waiting years to hear. Is Bitcoin finally starting to behave like a global macro asset instead of just another tech trade? Today, we're breaking down the 5 biggest stories driving the crypto market right now. From Bitcoin's surge past $73,000 to Trump's latest push for crypto regulation to a historic banking win that could change how the industry interacts with the Federal Reserve. So buckle up, because today's market is doing something we haven't seen in a while. It's giving traders hope again. Let's start with the market recap.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's take a look at the market after what turned out to be a very strong relief rally across crypto. Bitcoin is currently trading around $73,400 after briefly pushing as high as $73,800 to $73,900 earlier in the session. That's roughly a 7 to 8% move in just 24 hours, and it marks Bitcoin's first break above the $73,000 level in nearly a month. And if you look at the chart, you can see why traders are paying attention. Bitcoin pushed cleanly above the $72,000 resistance zone, which had been acting as a ceiling during the recent consolidation. Now, the next key level traders are watching sits around $74,800 to $76,500. If that zone breaks, the next leg higher could start to form. Momentum indicators are also heating up again. The stochastic RSI is back in overbought territory, which tells us the rally came in fast and aggressive. But that also means the market could cool off a bit before the next move. Now let's talk about Ethereum. Ethereum is currently sitting just above $2,170 after rallying nearly 6 to 10% from recent lows. That move pushed ETH back above its short-term moving averages, and traders are now watching the $2,200 level as the next key resistance. If Ethereum can break that level cleanly, the next upside target could sit closer to $2,300. Meanwhile, altcoins are finally joining the party again. XRP is trading around $1.46, showing renewed strength after weeks of sideways movement. And Solana is pushing toward $93, continuing to build momentum after reclaiming the $90 level. So, for the first time in a while, we're seeing Bitcoin, Ethereum, and major altcoins moving together to the upside. Now, zooming out to the broader market picture, Bitcoin dominance is sitting around 59%, which tells us capital is still heavily concentrated in BTC. But altcoins are beginning to wake up, and the Crypto Fear and Greed Index is currently sitting at 19, which still puts the market firmly in extreme fear territory. Which is interesting, because price action today looks anything but fearful. Historically, some of the strongest rallies in crypto begin while sentiment is still extremely negative. So what we're seeing right now could be the early stages of a sentiment shift, where price begins recovering before the crowd believes it. And that brings us to the first major story driving today's rally. But first, if you're watching the market today, trying to figure out whether this rally is real or just another head fake, grab yourself a cup of Whole Shot Coffee. Because when we come back, we're talking about the headline everyone is watching today: Bitcoin breaking back above $73,000 in its strongest daily rally in weeks. Stay with us.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And welcome back. Let's start with the headline that lit up the entire crypto market today. Bitcoin just ripped back above $73,000, delivering its strongest daily rally in weeks. And for traders who survived February's brutal sell-off, this move probably feels like finally getting some oxygen again. Here's what happened. Bitcoin broke above $73,000 for the first time in nearly a month, reaching intraday highs around $73,800 to nearly $74,000. That's roughly a 6 to 8% gain in just 24 hours. And the rally wasn't just limited to Bitcoin. Ethereum surged as much as 10%, climbing back above $2,100, while most major altcoins flipped green across the board. Trading volumes spiked, derivatives markets lit up again, and open interest started climbing, which tells us new positions were entering the market. So, what actually drove the rally? A few big factors. First, ETF inflows returned in a meaningful way, with institutional products from firms like BlackRock and Fidelity seeing renewed demand. Second, short covering. After weeks of bearish momentum, a lot of traders were positioned for further downside. Once Bitcoin pushed through key resistance levels, those short positions started getting squeezed. And when shorts start closing, that buying pressure can accelerate a move very quickly. Analysts from Bloomberg, CoinDesk, and several on-chain research firms are calling this a technical rebound after February's capitulation phase. Essentially, the market got extremely oversold. RSI indicators dipped into the low 30s, and eventually, buyers stepped in. And what's particularly interesting, this rally happened despite ongoing geopolitical tension in the Middle East. In other words, for at least today, crypto-specific momentum outweighed macro fear. Now, looking ahead, traders are watching a few key levels. If Bitcoin can hold above $73,000, the next upside targets sit around $75,000 to $78,000, which was a major resistance zone earlier in the cycle. But if the rally loses momentum and fails to break through $74,000, we could see a pullback toward the $68,000 to $70,000 range. Either way, today's move shows that the market still has serious buying power when sentiment shifts. But Bitcoin's rally wasn't driven by technicals alone, because the next headline might be even more important for the long-term future of the industry. So, grab another sip of whole shot coffee, because when we come back, we're talking about President Trump's latest push for the crypto market structure bill and why it suddenly has banks on the defensive. Stay with us.
Some mornings start quiet. No rush, no noise. Just good people and the decision to roll forward.
All right, welcome back. Now, while Bitcoin's rally grabbed the charts today, one of the biggest catalysts behind the scenes may actually be coming from Washington, because President Trump just lit a fire under the crypto regulation debate. In a post on Truth Social, Trump publicly urged lawmakers to move quickly on the Clarity Act, the proposed market structure bill designed to define how crypto assets are regulated in the United States. And he didn't hold back. Trump accused major banks of actively undermining the crypto agenda, warning that if the U.S. drags its feet on regulation, the entire industry could shift toward China and other global competitors. The Clarity Act is designed to do a few major things. First, it would establish clearer federal oversight for crypto markets, helping resolve the long-running jurisdiction battle between regulators. Second, it aims to address stablecoin yield disputes, which have become a major sticking point between banks and the crypto industry. Banks worry that yield-bearing stablecoins could compete directly with traditional deposits, while crypto firms argue that innovation is being intentionally slowed by legacy financial institutions. Trump's comments immediately boosted sentiment across the sector. Crypto-linked stocks surged. Coinbase jumped roughly 8 to 10%. Strategy rallied as much as 15%, and Robinhood also moved sharply higher. That tells us something important. Wall Street is starting to see regulatory clarity as a bullish catalyst, not a threat. And if the Clarity Act actually passes, it could unlock significant institutional capital that has been waiting on the sidelines. Analysts say a successful compromise between lawmakers and banks could trigger a major sentiment shift across the entire crypto market, potentially fueling a 20% or larger rally in altcoins. But if negotiations stall, uncertainty could continue hanging over the industry. So this story is far from over. But while Washington debates regulation, another major development just happened that could reshape how crypto interacts with the U.S. financial system itself. So don't go anywhere. When we come back, we're talking about a historic banking milestone for the crypto industry and why it could change how exchanges interact with the Federal Reserve. Stay with us.
She redefined what it meant to race without limits. She proved that silence could be louder than words. Fearless, fast, focused. A reminder that champions are built on grit. That same intensity now fuels her signature blend. Roosted and roasted. Bold Italian roast crafted with the spirit of champions. Ashley's Roosted and Roasted, only at wholeshotcoffee.com.
Alrighty, welcome back. Now, this next headline might not move the charts immediately like Bitcoin does, but long-term, it could be one of the most important developments in crypto banking we've seen in years. Because Kraken just received something that very few institutions in the world have access to, a Federal Reserve master account. Let's break down why this matters. Kraken's banking division, Kraken Financial, has officially been granted access to the Federal Reserve System, allowing the company to interact directly with the Fed's settlement infrastructure. That means Kraken can now settle transactions and manage liquidity directly through the Federal Reserve, rather than relying entirely on intermediary banks. In traditional finance, a Fed master account is essentially the golden ticket. It allows institutions to clear payments, manage reserves, and settle transactions within the core banking system of the United States. Until now, most crypto firms had to rely on third-party banks to interact with that system, which introduced delays, added risk, and sometimes even political pressure. But with this approval, Kraken can now operate much closer to the financial plumbing of the U.S. economy itself. For the crypto industry, that's huge. It improves liquidity, settlement speed, and counterparty stability. It also sends a powerful signal that regulators are beginning to accept that crypto-native institutions can coexist within the traditional financial system. And that's exactly why this announcement helped fuel today's rally sentiment. Investors see moves like this as another step toward mainstream financial integration. If this works smoothly, it could open the door for other crypto firms to pursue similar access, which means, over time, we could see exchanges, custodians, and stablecoin providers interacting more directly with the U.S. banking infrastructure. And that would represent a major structural evolution for the entire crypto economy. But while crypto is scoring regulatory wins, traditional markets are still dealing with a very different reality. Because when we come back, we're looking at global stocks continuing to struggle under geopolitical pressure and what that means for crypto moving forward. Don't go anywhere.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. Now, while Bitcoin and Ethereum were lighting up the crypto charts today, crypto-related stocks were quietly stealing the show on Wall Street. Shares of companies tied directly to the crypto economy surged across U.S. markets. Coinbase jumped roughly 8 to 10%. Strategy, formerly MicroStrategy, rallied as much as 6 to 15% depending on the session. And Robinhood also saw strong gains as retail investors piled back into crypto exposure. This kind of move tells us something important. When traditional investors want exposure to crypto, especially large institutions, they don't always buy tokens directly. Sometimes they buy stocks that benefit from crypto growth. Companies like Coinbase act as a gateway to the industry, while Strategy's balance sheet is heavily tied to Bitcoin itself. So when Bitcoin rallies, these stocks often amplify the move. And today's rally had the perfect narrative behind it. First, Bitcoin pushing back above $72,000 restored confidence that the market may have found a short-term bottom. Second, Trump's strong support for the Clarity Act suggested regulatory momentum could finally be shifting in crypto's favor. And third, the Kraken Federal Reserve banking milestone gave investors another signal that crypto is slowly integrating into the traditional financial system. Put all of that together, and you get a perfect storm of bullish sentiment. Now, if Bitcoin continues pushing higher, especially toward the $75,000 to $78,000 range traders are watching, these crypto-related stocks could continue climbing as well. Some analysts are already suggesting we could see 20% or more upside in these equities if momentum holds. But as always, if Bitcoin stalls or macro risks return, these stocks could also pull back quickly. Because when it comes to crypto exposure, they tend to move fast in both directions. But perhaps the most interesting story today isn't the rally itself. It's how Bitcoin behaved during one of the most volatile geopolitical environments in recent memory. Because when we come back, we're talking about Bitcoin's surprising resilience despite escalating tensions with Iran, and why some strategists think it may signal a deeper shift in the market. Stay with us.
Monday morning starts here, coffee in hand, ready for the grind. Leaving the bike behind, chasing the week ahead. Fueled by the passion to ride and the coffee that gets us there. Whole Shot Coffee. Fuel your life.
All right, welcome back. Now for our final headline today. And honestly, this one might be the most fascinating story in the entire market. Because while geopolitical tensions continue to escalate in the Middle East, Bitcoin is holding up surprisingly well. Despite ongoing U.S. and Israeli strikes on Iranian targets and retaliatory responses in the region, Bitcoin didn't collapse like many traders expected. In fact, after briefly dipping towards $63,000 earlier in the conflict, Bitcoin quickly recovered and has now surged all the way back above $73,000. That's a remarkable recovery, considering the level of global uncertainty. Traditionally, when geopolitical risk spikes, investors tend to rush toward assets like U.S. Treasuries, gold, or the dollar. Risk assets, including stocks and crypto, often struggle in those environments. But this time, something interesting happened. While equities were sliding under the weight of war headlines, Bitcoin began stabilizing. and eventually rallying. Strategists at firms like Bloomberg Intelligence and CoinDesk Research say this could be an early sign that Bitcoin is beginning to mature as a global asset class. Not necessarily a perfect safe haven, but perhaps something that's less dependent on traditional market correlations than it once was. In other words, instead of simply reacting to macro fear, Bitcoin may increasingly be trading on its own internal drivers, things like institutional flows, ETF demand, and industry-specific developments. And we saw several of those drivers today. ETF inflows returning, a historic Federal Reserve banking milestone for Kraken, and renewed regulatory momentum in Washington. All of that combined to create a narrative that overpowered geopolitical fear, at least for now. If Bitcoin continues showing strength during periods of global stress, that could attract even more institutional capital looking for diversified exposure. But of course, the situation in the Middle East remains fluid, and prolonged conflict could still create volatility across all markets. So this story is definitely one to keep watching. Now, before we wrap things up for today, let's hear from you, because it's time for the Proof of Thought mailbag, where we take questions and comments from the community. Stay with us.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Alrighty, welcome back. It's time for my personal favorite part of the show, the Proof of Thought mailbag, where we read comments from the community. And yes, I do actually read these. Sometimes I even survive them. Let's jump in. At Bearish Berry writes, "This rally is fake. Bitcoin going back to $60,000 by Friday." Barry, my friend, if Bitcoin does go back to $60,000 by Friday, you will officially become the most popular analyst on the internet. Until then, the market seems to disagree with you, because Bitcoin just ripped back above $73,000. But hey, crypto markets love humbling everybody equally, so we'll check back with Barry on Friday. Next, we've got at Altcoin Dreamer, who says, "Wake me up when alt season starts." Listen, if I could accurately predict alt season, I'd probably be doing this show from a yacht somewhere. Right now, Bitcoin dominance is still sitting around 59%, which means this is still primarily a Bitcoin-led move. But historically, when Bitcoin stabilizes after a breakout, that's when altcoins start getting interesting. So keep the alarm clock nearby. Next, at Macro Mike asks, "How is Bitcoin going up when the world is literally at war?" Great question, Mike. Normally, geopolitical chaos pushes investors toward treasuries, gold, and the dollar. But this time, Bitcoin dipped briefly and then rallied hard, which suggests something interesting might be happening. Crypto may be starting to trade more on its own internal catalysts, things like ETF flows, regulation, and industry news. And today, there were quite a few of those. Next comment is from at Satoshi Was Early. "Kraken getting a Fed master account is bigger than people realize." Honestly, I think you're right. That's a huge milestone. Direct access to the Federal Reserve System means faster settlement, stronger liquidity, and a big step toward bridging crypto and traditional finance, which, ironically, is something both industries have been trying to figure out for the past decade. So good catch there. This next one comes from at Regulation Station. "If the Clarity Act passes, the market explodes." Well, you might not be wrong. A lot of institutional capital has been sitting on the sidelines waiting for clear regulatory rules. If Washington finally provides that framework, we could see a pretty dramatic sentiment shift across the entire industry. But, of course, this is Washington we're talking about, so expectations should always be cautiously managed. And finally, a comment from at Smitty_Ken, responding to yesterday's show. Ken writes, "Brother, your reporting is spot on, and the information is so current and entertaining." Ken, I appreciate that. The goal here is pretty simple. Cut through the noise, explain what's actually happening in the market, and maybe keep things a little entertaining along the way, because crypto news can get pretty intense. And sometimes we all need a reminder that this industry is still supposed to be fun. So thank you for watching, Ken, and thanks to everyone else who keeps the comments coming. All right, that's today's Proof of Thought mailbag. And before we wrap things up, let's finish with one final thought about what today's rally might actually mean. We'll be right back after a quick word from our sponsor.
Our beans are washed in ancient waters, filtered through coal seams deep beneath the Utah mountains. Okay, not really. We totally made that up. But it does sound badass, doesn't it? Here's the truth. Premium Guatemalan beans, aged for 30 days in real whiskey barrels, then carefully roasted smooth in the golden light of California, inspired by the legendary Drunkard's Wash Desert Race in Price, Utah. Bold, smooth, with a subtle touch of whiskey and oak. Drunkards Wash. Whiskey barrel aged, bold and unmistakable. From Whole Shot Coffee Company. Fuel your life.
All right, before we wrap things up today, let's zoom out for a moment. Because today's market rally wasn't just about price. Yes, Bitcoin surged back above $73,000. Ethereum pushed back over $2,100. And crypto-related stocks exploded higher on Wall Street. But the real story underneath all of that is confidence returning to the system. Today we saw several signals pointing in the same direction. Institutional money flowing back into Bitcoin ETFs, a crypto-native firm gaining access to the Federal Reserve System, and renewed political pressure in Washington to finally create clear rules for the industry. None of those things are small developments. Together, they suggest that the crypto economy is continuing its slow transition from experimental technology into a recognized part of the global financial system. Now, of course, markets never move in a straight line. Geopolitical risks remain, macro conditions are still uncertain, and crypto is famous for changing direction when everyone least expects it. But today showed something important. Even with global tensions rising, Bitcoin didn't collapse. It absorbed the shock and kept moving forward. And if that pattern continues, it could be another step in Bitcoin's evolution from speculative asset into something much bigger. That's it for today's SENB Daily Brief. If you enjoyed the show, don't forget to like, subscribe, and share it with someone who wants clear crypto news without the hype. And of course, keep the proof of thought comments coming, because sometimes the best insights in this industry don't come from analysts, they come from the community itself. Until next time, stay sharp, stay curious, and remember, in crypto, the signal is always hiding somewhere inside the noise. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, SENB Hero. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit SENBHeroMedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.